All right, well, I'll introduce myself. So my name is Julie Ayers. I'm a CPA with a firm here in Charlotte called Aprio. We previously have gone by a couple of other names, but hopefully this one will stick. I know, as Holly said, I've been working with them for really, I think like 20 years. And so I got here to Charlotte in 1999. And as many of you know, the only thing happening here in Charlotte in 1999 was real estate and construction. So if you were going to be in business, you knew real estate people and you knew construction people. So that's kind of how I got started and love your team. I love real estate people. So kind of stuck with that. Karush had sent me some things that he kind of wanted to talk about for, being RE/MAX agent specific, some questions that maybe might be pertinent to you guys. So one of the ones that he had mentioned was rental properties and why they can be more advantageous to real estate agents. And so going to talk a little bit about that. Many of you may already know, but in rental real estate, when you are not a real estate professional, your losses can be limited to based on your income. But for you guys, since you guys are real estate professionals, any losses that you have in rental real estate can be deducted against other income. So it's a huge advantage that you guys have being in your profession when you can look at what you might want to do on rental real estate. A couple other questions that he had asked about were, I guess one of the things he wanted to talk about was some people maybe have questions on whether it's better to lease or buy a vehicle. And so that is really, some of it's just a financing decision and a timing difference. So if you lease your car, you take that lease expense as you pay it, basically. And then if you buy a vehicle, you're going to put that vehicle on the books and you're going to depreciate it over time. Some of it has to be over 5 years, but certain vehicles such as heavy SUVs and heavy trucks are able to be taken more quickly. So if you have a really big commission year, you might want to look at buying, one of these more expensive heavy vehicles. The key to that is the vehicle has to be over 6,000 pounds gross vehicle weight. So that is not curb weight, but gross vehicle weight. So that is something, like I said, if you're looking, like if you had a great year in 2021 and you're looking for ways to shelter some income, you should possibly look at the vehicle purchase, and instead of leasing this year or buying a smaller vehicle, you might want to look at that 6,000 pound vehicle that would be an SUV or a truck. Karush, I saw you joined us. We kind of started without you.
No problem. Sorry, I was finishing another Zoom call.
Okay, so I answered the question that you had about leasing and buying, and I thought I'd take a pause there to see if anybody has any questions about that specifically. How it works, mileage, leasing, buying. Does anybody have any questions they want to address? And you could put them in the chat, or you could just take yourself off mute and yell it out. But if not, we can go to some of the other questions. I think, Karush, your next question had to do with business expenses and what are some eligible expenses. So I would say in your guys' field, one of the keys is that, Sandy said she bought a 6,000 pound vehicle plus she wrapped it. so she got both of those deductions. So that's great. For business expenses, I would say that, most everything that you do is probably a business expense. And one of the ways you need to look at it is to separate yourself from your business. And so if you worked for somebody else, if you had a job where you worked for IBM and they gave you a corporate credit card to spend, you would try and make everything a corporate expense. So you would, if you went out to dinner with a person who was a client and also a friend, you would take that expense, right? If you were buying a new computer, you would take that expense and you would have the company pay for that. So I think that what happens sometimes is that because your career is so intertwined also with your personal life, it's hard to separate the two. And I recommend that you actually would have two separate cards. So one that you only put business stuff on and one that you put personal stuff on. And that way you make that decision when you buy. Like is this a business expense or is this a personal expense? Because what I find in real estate and a lot of other places where people are self-employed is that because the line's a little blurred, and then they get to the end of the year and they're like, I don't know what those expenses were. So then they kind of rip themselves off by not taking all the very valid business expenses. So I don't even think you have to get really aggressive. You just need to track everything that you spent and know whether that was a business expense or a personal expense. So, Krish, we also had already kind of talked about the rental properties and how, you know, for real estate people, they're able to take their losses as where others aren't. I don't know if you had any other questions on that you wanted to address specifically. We talked a little bit about the accelerated depreciation on the vehicle and the 6,000 pounds. So like I said, that is a huge advantage. And once you have the vehicle that's 6,000 pounds, remember, you also want to track your gas, your repairs, your car washes, your satellite radio, your GPS system. So everything that goes involved in your day-to-day of running the car, and, you know, really how most of that is running your business. So that's all very, very important that you want to track all of that. Where previously, sometimes maybe you just tracked your miles driven if you were doing mileage or the lease. I'm just kind of looking down in the chat. So one of the questions was, do you recommend a different LLC for an agent's rental properties or flips? And we do recommend a different LLC. There's a couple of reasons. One, I'm not an attorney. I believe there's an attorney around here that'll address some of the legal reasons for doing that. I think but there are also reasons that the taxes in theory could all be done together, but it all has to be reported on different schedules. So if you want to keep your tax preparation costs down, it's good to keep things in different little silos. So Andrew can talk about the legal reasons, but the tax reasons are just more about keeping everything where it belongs so that you're making sure you're maximizing your deductions. We can kind of blur the things. Andrea, do you want to talk a little bit about the legal reason why to do that?
Well, I was just going to say, the reason you want to keep them in different LLCs is because basically if someone is going to sue you, they can attack whatever is in the LLC. So if you have multiple properties in the LLC, then they can go after whatever's contained therein. So I always recommend a different LLC for each rental property, because that's all that's subject to them, you know, attacking or suing you over is whatever's in that individual LLC. So, and Julie, let me ask you, because I always think for tax purposes, it's better to have a single member LLC. Do you agree with that?
To keep your tax prep costs down, that is ideal.
Yeah,
right.
Okay.
So a single member LLC is disregarded for tax purposes, and that's actually like an actual term with the IRS. And so what that means is you don't have to pay to have a completely separate tax return done. You can go ahead and just file that on a different schedule on your personal return. So that definitely holds down your costs. One of the other questions in there, is there a good program or app that you see real estate professionals use to keep track of expenses? I would say it's whatever app you're most comfortable with. I've seen a lot of people using Xero of late. I am not super comfortable in there, but a lot of people have been using Xero. I think the really important thing is that regardless of like what app you use, like I said, is that you have a completely separate financial instrument that you're recording on, so that you could literally just go and pull that credit card and say, I know all of this is business, and not having to be, when I say, oh, that your taxes are X, you need to find more expenses, than digging back through other things and trying to find it. So I think it's most important to keep them separate from the beginning, is what I would say. But a lot of people have started using Xero, and I say are very happy with it. It's not as strong as a balance sheet P&L as some of the other accounting software, so that's why accountants like me aren't that comfortable yet with it. But people do really like it.
Julie, I use Mile IQ to keep track of my business mileage, so I can keep track of all the logs. Do you have other clients using that system? Is that something you're familiar with?
Yep, we do have a lot of people that use it. Actually, in all professions, we have a lot of real estate people, and actually a decent amount of attorneys and doctors that make house calls and stuff that use it. So it is a very good system and allows you to track some things other than just the mileage. I think to that point, technically, even when you buy the vehicle on the company, that heavy vehicle that we talked about, you are supposed to be tracking your mileage. So that is good to have, for if you were to ever get audited. You don't need it other than that, but if you were ever to get audited, they do want to see that, this is the actual business miles that you drove.
Okay. I have another question. As we're talking about business expenses, a lot of us, they have, assistance that we pay, whether it's real estate related or financial, to help us with planning. As far as payment to these assistants, you and I had conversations about, how tricky it gets as far as paying somebody in form of 1099 instead of running it through a payroll and salary. Any new changes, any updates on the rules around that? Just any point to share with our brokers? Because I know several brokers within our organization that they're using, outsourced help in their business. Just want to make sure that if there is anything that we need to share with them, just to make them be aware of the rules around that type of payment as 1099, just share that with everyone.
Yeah, there has not been any real large changes, but I will give an example that I use that I think helps people to understand, when to use one or the other. So I would say that there are two extreme examples. So if you are hiring a roofer to come and fix your roof, right, then you are going to pay the roofer whatever they're going right. I think my last one was like $24,000. I don't know, $24,000 to fix your roof. But you don't tell the roofer what time to get there. You don't tell the roofer what time to eat lunch. You don't tell the roofer how big his team needs to be. You're just paying for the roof to be done. The roofer is a very clear independent contractor, right? So if that's a 1099. If there is a receptionist that is sitting in our office, so we have a receptionist here. So she comes and she has a certain time that she comes to work, right? She has certain things she has to do. It's all very rules based. So she is clearly an employee. There's a lot of control over what she does. I would say that most everybody else is somewhere in between the roofer and the receptionist. And so the more you are closer to the roofer, the clearer it is that it's a 1099. The more closer you are to the receptionist, the clearer it is it's an employee. The reason that you care as somebody who is paying this person is if you treat them as an independent contractor and they come back later and say they should have been an employee, then you could be held liable for back payroll taxes and actually a portion of federal withholding. So that's one of your big risks there, is if you have an employee you're treating as a contractor, that if they were to turn around and say they should have been an employee, then that might cause some problems. Now that's really your big issue out there with the IRS on whether or not they're independent contractor and employee. And Andrew, I don't know that if you guys deal with any of that at all, really, do you?
No, not really.
So yeah, so that would be kind of the difference on that. So if they could sub out their work, obviously they're an independent contractor. If they can kind of do it whenever they want, that's more to be an independent contractor. If they work for more than one of you, right, then that is more of an independent contractor. So that's something to think about.
Julie,
so
there was a question up here in the chat that says, what's the minimum income level someone can or should start an LLC? I mean, from a legal standpoint, there's no minimum, but I didn't want that question to get missed.
Okay. Yeah, so I would say for an LLC for tax purposes, since it's disregarded, it's just like being a sole proprietor. So for an LLC for tax purposes, I would say there really isn't an income. I think where the income amount comes in is, we've talked before about whether or not you should be an LLC taxed as an S corporation or just an S corporation itself. And that kind of what Andrew was talking about before goes to the fact that then you have to file a separate tax return. So there are definitely additional costs, and you also have to have a payroll, even if it's just you who works there. So there's additional costs to being taxed as an S corporation, but the savings is on self-employment tax. So in an LLC, you pay self-employment tax on the net income of the company, where in an S corp you wear two hats. One is the owner and one is the employee. The employee pays self-employment tax or Social Security and Medicare, as it's called then, and the owner does not. the government is very keen to the fact that you have to have a reasonable salary. So you can't start an S corp and do 12,000 in salary and 200,000 as the owner. So you have to be very aware of reasonable compensation. So that being said, I think in that case, there is like, unless you are netting after expenses somewhere about 60,000, it probably is not worth the additional cost to be an S corporation. So I'd say,
Julie, I have a question
Yeah.
about agents towards the end of the year.
Mhm.
Some of them already starting to keep their commission checks. They're not turning it in, thinking that they can not pay IRS in 2021.
Uh-huh.
And you and I have thought about that and the
Mhm.
danger. So can you go over that a little bit and explain that to everybody?
Yeah, yeah. So I think basically what we're talking about, I think, is putting it in a drawer. So where people will say, you know, so you earn the commission, Remax cut you your commission check, and then somehow your commission check just doesn't make it into your bank account, right? And it's sitting in a drawer somewhere. So the rules around that have to do with constructive receipt. So if you have received your commission check, then it counts as income regardless of whether or not you've actually put it into your bank account. Now, some people may hear of companies that are like, well, you know, you don't have to report that whole last week. You know, if you were really out the last 3 days of the year or something like that and didn't have constructive receipt of it, that's different than just what I call putting it in the drawer and not reporting it. And so that is not the drawer thing is not acceptable. That is a problem. As soon as you have constructive receipt of your commission, that is income, whether or not you decide to deposit the check or not. I think that's what you're asking, Hadi, is that right?
Well, yeah, but that's even a little bit worse than that, is
Okay.
that they have the closing and the attorney send the check. They don't, you know, to Remax executive, but they don't turn that check in for processing, which puts us
Okay.
in danger as well.
Correct.
So
I
that
would say
means
that
the
puts both
check
of
is
them in danger.
issued, yeah. So we have to get the check so we can pay their commission. So they
Mhm.
hold on to the check for a month
Okay.
and then they turn it in January. 2nd of January, I want to get paid then. That's how they're doing it.
Okay. And I think it's the same, just on an even bigger level, because now we've involved Remax, the organization, as well as the person, right? We have constructive receipt of the closing once you receive the check. So if you put that check in the drawer and not turned it into Remax, we're actually at risk on 2 levels. So Remax is at risk on their level that they haven't reported it, as well as the individual agent being at risk. And keep in mind that, so you think, well, how is this ever really going to be found out? And I think the important part is, so I think when the attorney issues the check, right, they're recording it in their books that it's been issued. So if anybody looks at their books and sees there's checks out there that have not cleared the bank, they're going to start looking at the organizations who have not deposited their checks. So, you know, it's not just whether or not the agent or Remax were to get audited. It could also be the people that are actually issuing the checks get audited, and that starts a whole trickle down effect of who gets looked at. So, yeah, so better to, I guess, when in this year, I would say, for like, so in this year, it's probably, you probably want to accelerate some of those checks, because we all believe there will probably be tax increases next year. So this is definitely, if you ever thought about doing what Hadi just said, which I don't think is a good idea, this is not the year, because it's probably not to your benefit, because next year's taxes are probably going to be increasing. So we don't really think this is the year to be deferring income. I would say people are actually accelerating income this year to try and get it into the 2021 year. So, okay, some of the other questions, let's see, we have, oh, just lost my screen there. Are there current rules about deductions for charitable contributions? So right now we believe the rules will stay about the same. The charitable contributions will be deductible up to 50% of your adjusted gross income. So most people don't hit that threshold, but you can contribute to charity up to that. If that did not answer the question, please let me know. That's what I think it asked. Let's see. There was a question, must have been about insurance. because someone said you can write off insurance, but not the mileage. So yes, if you can either take on a vehicle mileage driven, so you can just take miles alone, or you can take what's called actual, which would be where you took the lease payments, or if you bought the vehicle, the depreciation. And when you're taking actual, you add the insurance, the car washes, all that kind of stuff. If you're taking a direct mileage, you just take the mileage. So you take the mileage times the government rate, whatever it is that year. And I'd have to Google it. I think it's like 58 cents this year. But
Julie,
huh?
is there a cap, I guess, as far as mileage, or maybe let me rephrase that question.
Mhm.
Is there a mileage limit that you think it's beyond that point, it will be a red flag as far as how many miles a year a realtor can drive?
I don't know that there's per se. I would say that it's definitely in a relation to the amount of sales that the agent has, or if for some reason they had a lot of deals that didn't close, that they could show the deals that they were working on. Right. It definitely has to be reasonable. So if you had 2 closing this year and then you're reporting 40,000 miles, right, that's probably not going to fly.
I
But right,
can't
so
say I was hauling and hoping.
right. So I think, yeah, I think that's one of the reasons why using the app that you mentioned can really like swing the needle, because if you can really put down there, like, I really was in the car and I drove here and I drove here and I drove there, then even if the miles seem excessive, you're more likely to get the deduction than just simply saying, I drive a lot, I'm in real estate. So I would definitely say tracking would be helpful in that situation. Let's
Thank you.
see. My husband is a buyer's agent. Is it better for him to get 1099 or put him on the payroll, since all the money goes into one pot? So I would say, kind of back to the situation about the independent contractor and the employee, you would want to do whichever one he really is. If he has a lot of, if he can truly be an independent contractor, and as a buyer's agent, he has a lot of expenses of his own, then a 1099 might be preferable, because he can then deduct his own expenses. Employees can no longer deduct any of their expenses. So that is a very limiting thing. Previously, a couple of years ago, for most of the time, it had been, there was still an income threshold, but employees could deduct some of their expenses, and now they can't deduct anything. So a W-2 employee is very limited on what they can do. Let's see. Besides maximizing contributions to a SEP and business expenses, are there other things we should be considering for write-offs? High deductible insurance will allow an HSA. So yeah, I think HSAs are great if you can get them. I actually have still an idea from I'm not a financial planner, but I have a couple clients, especially some clients that are in a younger age group, that have gotten high deductible plans, and they have HSAs that are attached to them. They're contributing to the HSAs, but they're not actually spending the money, even if they have some medical bills, and they're letting that build and build and build with the thought of using it later when they're older, because HSA money comes out with no taxes if you use it for medical bills. So I found a large rise in HSA contributions, and I think that is a great vehicle to do. Obviously, the SEP plan can be a very good plan. I would recommend everybody look at 401k plans. You can get a uni-K plan if you're the only person in the company, and it allows you to do more in retirement than the SEP. They are more expensive than a SEP, so there's definitely a cost to be taken a look at there, but they are allows you to do more. And another great advantage of them that I think, especially in an industry like yours that can go up and down, is that most uni 401ks have a loan provision in them that would allow you to take money out of the 401k in a year maybe that things were a little bit slow. You can take up to $50,000 in some cases as a loan and not pay taxes on it. And you obviously have to pay it back. But there is a loan provision in a lot of 401ks that I highly recommend that people look at, especially in industries where you're on commission and things can be kind of up and down. So that if you needed to take a hardship money out of a retirement plan, you would not be necessarily subject to the income tax and the penalties that are very high on other retirement plans that have to take out. There are other options you could look at, like a simple, that are less expensive. They don't have the loan provision, but that's another option. Other deductions to look at. I really recommend, like I said, I don't know that there's anything major, right? Because to get a deduction, you have to give somebody else your money, right? You have to spend money to get the deduction. But I think it's really, really important, like I said, for you guys to make sure that you're looking at your expenses as you spend them or after, since we're already in November, and go back and make sure that you're taking all the advantages that are correct, that are real actual business expenses. I would imagine there's very few people on this call who have not missed some actual business expenses. But yeah, other than that, like I said, just making sure that you're thinking of everything. So have you taken your home internet, right? Have you taken your cell phone? If you bring an iPad with you to show things to your clients, if you take in your iPad, all that kind of stuff, to make sure that you're actually including all of that would be some of my thoughts on those. Let's see, how much can you contribute to a UniK? So on a UniK, you can contribute, assuming that you're under 50, I think it's 19.5 right now for the employee side. And for the, if you're over 50, it's now, I think it's 24, 20, no, it's probably 26 now, 26,000 now. And then in addition to that, there is a match, which is based on the amount of compensation you have. And so we would have to calculate that. But it's because it has the employee portion and the employer portion, that it gets you over the SEP amount usually. Is that amount affected by your SEP contributions? So most of the times you cannot have both. So you'd have to look at it. You can have your retirement people look at it, but most times you cannot have both. Let's see. I think agents who are considering forming an S corp would benefit from hearing more of an explanation about paying themselves a payroll versus shareholder distributions and the combination of the two. Yeah, I'd happy to go over that. So I kind of touched on a little bit, but when you're an S corporation, so you are a corporation just like McDonald's. So if you think about it, what McDonald's has is McDonald's makes hamburgers all year, and McDonald's writes checks to all the government. So they pay the federal government and all the state governments income tax. And at the end of the day, they send dividend checks out to the owners, right? And then the owners pay tax on those dividends, but McDonald's doesn't get a deduction. So they're a C corp, and as an S corp owner, you have said, I don't want to pay the taxes twice. So I'm going to not have my corporation pay any tax. I'm going to take the net income and put it on my tax return. And so that's what the S corporation is, a small business. And it basically avoids double taxation. And so the net income of the company gets on your personal return. That's what you pay taxes on. Very similar to the LLC, where you pay on the net income. So the difference between the two is that on the LLC, you are not an employee, you're just the owner, and you pay self-employment tax, which is 15.3% up to the Social Security wage, which is about 130,000. You pay 15.3% self-employment tax on that net income. On the S corporation, you are two different people. So you have the employee who gets a wage, and you pay that 15.3% on that. But the rest of it is just like the dividend you would get from McDonald's. It's a distribution to the owners of the company, and that money, you don't pay the 15.3% on it. So it's not changing your income tax at all. It's just changing your self-employment tax. And I know this is a very foreign concept. So if you guys want to think about it and look at it, you're more than welcome to call me or email me, and we can go over it again. I would say that even for people that work here at this office, when they start, because S corporations aren't necessarily taught as much, it takes a little while to sink in how an S corporation actually flows over the income. But it can be a self-employment tax savings. Again, the government is aware of it, so it's not illegal. They're very aware of it, but what they say is that part that you pay yourself as the W-2 has to be reasonable.
Mhm.
so that you paid in enough Social Security and Medicare. Let's see, so other things, I think someone had asked about red flags, what red flags are out there. So there's some historic red flags that are no longer red flags. So one of them is the home office, right? So people used to hear the home office was a huge red flag. It is not a red flag anymore. In fact, it's so common that the IRS actually has a standard or simplified home office that you can take, which basically takes the square footage of your home office times $5. The maximum is $1,500. So, but you can just take a simplified home office. You can still go the traditional route, which is calculating all your utilities and that kind of stuff and taking a percentage. But most of the time people take the simplified route now. One caveat to that is a home office technically should be an office. There should be a door. Just sitting at your kitchen table doesn't count as a home office. Other things I would say probably are your line of work that people try and take that on audit get disallowed. So uniforms, dry cleaning. So if you're looking at those type of things, the only thing that counts is if it's actually embroidered with the company name. So if every one of your shirts is embroidered and says Remax, then you can buy those and deduct them. But if you just have a nice shirt on, that's not a deduction. Let's see, other things. People try to take their hair. That doesn't really work. So, and a lot of things aren't necessarily red flags as much as they are is if you get pulled for audit, they see some of these things that are clearly personal, then they start to dig a lot more on other stuff. But I would say those are some of the things that come up a lot that we just steer clear from. Another big change that has happened over the past 2 years is that technically entertainment itself is not deductible. Meals are still deductible. Entertainment is not. And so what that means is if you take a client to a Panthers game, the tickets themselves are not deductible. But if you buy them dinner and drinks while they're at the Panthers game, those are deductible. So entertainment itself has gone away as a deduction. Meals and entertainment, the meals portion has not. So one of the ones that hits a lot of people in business is that golf is no longer really deductible. So the meals and drinks you have while golfing are, but the greens fees are not. So that's one change that has hit you. And yes, I just saw that. Yeah, so meals, you report 100%, but only 50% of it is actually deductible. So you report the entire 100%, but the way the law is written, you only get 50% of that. So can you write off 2 offices, home office and the office at Remax that my assistant works at? So I'm going to say it back. So you can have 2 offices. You can't have 2 home offices. But if you have an office somewhere else and a home office that you actually do work in, you can take both. And then I think, how do you answer the question? Yeah, so dry cleaning is only deductible if it's embroidered. So everything, it has to be branded in order it to be deductible. Like I said, just having nice clothes is not a deduction. So I don't know. So I don't know, Andrew, I think you might have had a couple of things you want to say. I'll stay on as we have more questions.
Yeah. Hey, everyone. Andrea Wood at the Wood Law Firm. I know a lot of you. I do residential and commercial real estate closings and business formation. So the Wood Law Firm's been in existence. I've been practicing for 33 years. When I say it, I'm like, whoa. And I've been doing real estate since 2004. So I used to litigate before then. So, but I came to my senses and now I do real estate and I love it. But I was just going to talk briefly about how to form a business in North Carolina. And so first thing that you have to do is you have to choose the business structure. So you can choose a sole proprietorship, an S Corp, like Julie talked about, or an LLC, like we've been talking about. So you also have the C Corp, you have the partnership, but for your purposes, most of what we see is really the sole proprietorship, the S Corp, or the LLC. The second step is to choose a name, and you have to do a name search. So you're going to check the Secretary of State to see if your name is available. You're also going to check things like the Register of Deeds in the county where you are, surrounding counties. You're going to see if there's any trademarks or patents or anything out there with the name that you want. So you really need to do a search for that, which we do for you if you decide to hire us to form your business. And the one thing I wanted to point out for you all is that if you want to use the word realtor in your name, you have to check with the North Carolina Real Estate Commission to see if you can use it. There is an administrative code that they have, 18 NCAC. I'm not going to read it all to you, all the things, but it basically says the name for a business corporation shall not contain the word realtor. So you have to get permission to use the word realtor in your name of your business if you want it. You also have to remember that the name cannot contain language stating or implying that the entity is organized for any purpose other than something that's lawful or permitted by its formation documents. And then the documents that are required, if you're going to form an LLC, you're going to do articles of organization. If you're going to form an S Corp, you're going to do articles of incorporation. You don't need anything for a sole proprietorship. So you're going to decide, excuse me, my allergies are in full blast right now. So once you decide on what type of structure you want, then you're going to determine what you have to file with the Secretary of State. Then you're going to actually register your business with the Secretary of State. So you're going to, one thing that we've been finding lately is on one of the articles of organization, articles of incorporation, part of the form asks for personal information. And most people don't want to put that on there, but we've been finding lately that when people go to open up their bank accounts, because you're going to want to have a separate bank account for, let's use your LLC, for example. You want to have a separate bank account for your LLC. Some of the banks are not allowing people to open up the bank accounts because they show them their articles of organization and their name isn't on it, which that's something relatively new in the last couple months. So Julie, I don't know if you've run into that or heard anything. So there's a question. You're going to have to answer that. I'm not a tax attorney. I'm not allowed to give you tax advice. I shake my head and agree with Julie, but I'm not allowed to give you tax advice.
I would say that it was kind of what we were talking about before. So on the LLC and the S Corp, the income tax is the same. It's the self-employment tax that's different.
Mm-hmm. Right. And that's for I have some rental property that I have in LLCs, but I also have the Wood Law Firm. And the Wood Law Firm is taxed as an S Corp. And one thing my accountant years ago was you have to pay yourself a salary and it has to be reasonable. You can't pay yourself $20,000 and take $400,000 in distributions. The IRS will frown upon that. So I am agreeing with Julie on that, is you have to watch and make sure that your salary that you pay yourself is considered reasonable based on your total income. So we register the business with the Secretary of State. And then there's the filing fee. We charge $850 to do all this for you, by the way. And that includes paying the Secretary of State filing fee, which I think right now, my paralegal usually does, but I think it's like $225. So we pay, that's included in the $850. Once you are registered with the Secretary of State, then we go ahead and we get your EIN for you. So we apply for your employer identification number with the IRS. So we get all that taken care of. And then you're going to have to hold an organizational meeting. I know if it's just a single member LLC, people are like, why do I have to do this? Well, you have to review your articles of organization, which we will draft for you. And then you have to designate a manager or member if that's not included in your articles. And you need to adopt resolutions. One thing I find in real estate a lot is people with LLCs, they go to sell. And I say, well, I need your articles of organization. I need to know who can sign on behalf of the LLC. They're like, well, it's just me. Like, I know that, but I still need your articles of organization, or I need a resolution saying this person can sign on behalf of the LLC or the corporation. And a lot of people haven't done that. So at the last minute, we end up drafting a resolution for people to sign saying, yeah, we can sign on behalf of this company. So you always want to make sure that you hold your meeting And then the other tip is always remember that you have to file your annual report with the Secretary of State to maintain your registration. Because if you don't, they can administratively dissolve your organization. So make sure that you're filing your tax returns, that you're doing your annual reports. All of that is really important. Once you form the LLC, you can't just let it sit there. Okay. So really forming a business in North Carolina, from the practical formation part of it, is simple. It's easy and simple. And we would be happy to help anybody, that has, and if anybody has any questions.
Well, we have offices in South Carolina. Does that make a difference whether you are in North or South Carolina when it comes to creating an LLC or S corporation?
It doesn't really make it different, but it could affect, Julie, you can answer this, a tax. Like I have rental property in Georgia. And so when I talked to my accountant, he said it was better to form the LLC in Georgia for tax purposes. So that's what we did. So we have an LLC in Georgia. So that holds that rental property.
Yeah, and the taxation is, like Andrew said, is based on the state where it's earned. So if you're a real estate agent that is working in both North Carolina and South Carolina, technically you should be filing a North Carolina and a South Carolina return. You get a credit in the state. So if you live in North Carolina and you report some income in South Carolina and pay tax, you'll get a credit for what you paid in South Carolina. So it doesn't really increase your taxes, but it does increase your tax prep fee. And I think the advice Andrea got was good, is that if you're going to have something that just has income in one state, it's easier to just report that entity there because it avoids that double recording.
Okay. So and this is for you, Julie.
Mm-hmm.
My wife and I are both realtors. She hasn't shown an income in over 12 years. Would it be wise to pay her an income? If so, what is the maximum that would be advised?
So if I think she's earning income, it sounds like. So if she is earning income and you guys are filing joint, okay, I said she's not earning income. So if she's not earning income, then there's no income tax advantage to file, since you're filing jointly, to spreading the income out between the two of you. I would say the only thing that you should look at for her is maybe talk to the Social Security about where her Social Security is. There's a whole lot of, when you are married filing jointly, there is a whole lot of different ways that you can claim your Social Security. There used to be like 72 of them, but I think it's down to like 18. But there's different ways of, if you take your Social Security or half your spouse's or early and that kind of stuff. And surprisingly, actually, Social Security is really good about talking to you about it. So also financial planners usually can run Social Security scenarios for you. So you might want to look at how much Social Security she's eligible for.
Okay, there's a question: when it comes time for retiring as an S Corp owner, are there guidelines that you can provide? As far as, you can file with the Secretary of State to dissolve your S Corp. As far as taxes, Julie, is there anything? I mean,
not really. So assuming you didn't put a lot of appreciating property in the corporation, and it's just really running the operations of being a real estate agent, then it really is just dissolving the company. If you had put appreciating property like rental property in there, which I do not advise at all, I want to be clear about that. But if you did that, then there would be some other ramifications to closing it out. But if it's just an operating business, there should not be any.
okay.
I think Ashley said, I created an LLC in South Carolina, not realizing this would be an issue, and had to file as an LLC operating in North Carolina as a foreign entity in order to get my firm license. That's correct.
Yep.
Yeah, you do have to do the authority. You have to get the authority to do business in other states where you're going to be.
So Julie, let me ask you, because I do have, and you touched on this a little bit, but I get a lot of questions. And again, I have to refer them to CPA about why we should do a single member LLC versus a multi-member LLC. Like if a husband and wife want to own rental property, and I always suggest that it's a single member LLC, either husband or wife is the manager and member. And they're always asking me why. I'm like, well, I'm not allowed to give you tax advice, so you need to talk to your. But,
yeah, I think it's just as simply that, right? So it's just really the cost of your tax returns. So if you have 5 or 6 different rental properties, all in multi-member LLCs, each one of them is going to have its own tax return. And so that's going to cost more money. We're happy to take your money, but it saves on tax prep costs when it's a single member LLC. And the tax implications are the same. So it's really just the prep cost. So, yeah. Any other thoughts, questions? Does it, Jack asked if it provides some liability to have multi-member LLCs, Andrea.
No, I mean, oh, liability protection. No, because if someone is going after your LLC, they're only going to be able to go after whatever is held in that LLC. That's one of the advantages of having one. So does it not provide it doesn't provide any more liability protection, I think is what you're asking, to have a multi-member versus a single. Because whatever's held in the LLC, that's why I always recommend that people put, if you're going to have multiple rental properties, for example, we have the place in Georgia, and then we have a beach villa that we rent out at Hilton Head, and I have 2 separate LLCs for those. Okay, so because if somebody were to come after us, they can only attack what's held in the LLC as far as what the assets are and what's available. So.
Julie or Andrea, the difference between, this is a question that a lot of people ask, S corporation LLC. For a realtor, does it matter which one? I mean, I personally do single member LLC for property purposes, but for the tax purposes, for doing business, is an S better than a LLC or vice versa?
I think on the tax side, like I said, it depends on how much money you're going to net. Like, I believe that if you're going to net more than $60,000, the S corporation has actual dollar benefits, right? And so I think your operating entity, you would want to be an S corporation. In the example that Andrea was giving about owning real estate, I think like you do also, Hadi, is you want those in LLCs that are not taxed as an S corp. And so the main reason for that, there's a lot of small nuances on, we can talk about corporate law versus tax law, and I mean partnership law, and how things are flexible and not flexible, which has a lot to do with how the tax law is written. But to me, the really important part about the LLC has to do with something called cost basis and how things can move out of an LLC. So in Andrea's case, she said that she has a villa in Hilton Head that they rent out, right? And so it's owned in an LLC. Well, let's say that fast forward 25 years, because she's very young, when she wants to retire in 25 years, that she wants to give that villa to her grandchildren at that point. So she doesn't want to sell it to me or to you or somebody else, but she doesn't want to have to pay taxes on a large gain, right? Because she wants, and we'll kind of skip depreciation for a minute, but she doesn't want to pay taxes on a large gain, but she wants to give it to her family. If it's in an LLC, it can come out at her cost basis. So she can quit claim deed or however the legal piece is and move that over to her family with not having to pay any taxes really. If it were held in an S corporation, to move it out of the corporation, it has to be treated as a sale. So Andrea would have to pay taxes on the gain because most beach property is appreciating, right? So there would be a gain on her villa. And so she'd have to pay taxes on that in order to give it to the kids. Now they'd get a higher basis and there's some other things there, but that's one of the main reasons, has to do with, we really don't want appreciating property in a corporation, unless it's truly something like if you're in the business of flipping homes or you build construction, those can be in a corporation. But if you're just going to invest in rental real estate, you really want to keep it in the LLC format, which is taxed either as a sole proprietor or a partnership.
And Hadi, that's exactly why I do have structured my business as an S corp and the real estate that we're holding is in LLCs for exactly that reason.
Yeah.
Thank
I
you.
think- Yeah. And if anybody wants to buy a beach villa and invite us down, we're happy to come down and visit you guys.
Except the problem is it's rented so much this past year. It's been great. but we can't even get time in there as owners.
I would imagine so.
Yeah. So,
But yeah, did anybody have any additional questions or thoughts?
So I think
yes,
what,
I am for hire.
let me, Julie, so
Yeah.
if any of these guys haven't created an S corporation, they should go ahead and do that this year.
Right. So yeah, but keep in mind the one thing you definitely want to do it. Like I said, if you're gonna net over that 60,000 for 2022, the one thing about the way the corporation works is it's like being born. So if you were to call Andrew today and get it all set up, it would only be your commissions from that point on that would be in the S corp this year. So very important if you think you're going to net that money, especially for 2022. Ideally, you'd like to have it set up before we roll into January 1st.
it takes about 3 or 4 weeks to get everything done. So just with the Secretary of State is taking a little bit longer than they used to. So, so it takes somewhere between 3 and 4 weeks to get a formation done.
And Diane, on the S corp, you would open it. If you work in both states, I would open it. If there's no other reason, other than taxes, I would open it in the state you live. You could open it in either or. And if you have an S corp, you can do a SEP IRA, but your SEP IRA is based on your W-2 wages or your reasonable comp. So it's not based on the net income of the company. So if the net income of the company is 150 and your comp is only 75,000, your 25% SEP will be on your 75,000, not the 150. If you're an S corporation, you definitely would want to look at the 401k option, because that will clearly be more, because you can do the employee portion and the 25% match. So it's going to be a lot better. Specifically in an S corp, you definitely want to look at the 401k option.
Julie, just a side note for brokers that are thinking about incorporating their business. If you're not incorporated at this time, just a heads up, FYI, just the fact that you have a tax ID and you have an active corporation doesn't mean that we can pay your corporation. The commissions can only be paid once you obtain a firm license in North Carolina. So keep that in mind. If you're in North Carolina and your corporation is formed in North Carolina, in order for us to cut the checks to your business instead of you personally, you will need to apply for a firm license through the Real Estate Commission. And that process takes every bit of 10 days. So I just want to give you guys a heads up. If you're thinking about doing that and recording commissions under the corporation this year, you probably want to start on it as soon as possible.
Okay. And Ken, I think you had a question. You can go to the LLC state website, set up an LLC, open bank accounts, then set up an S corp and get a federal ID number. Right, you have to create the LLC and then get the federal ID number before you can get a bank
federal
account.
ID number first, and then you have to, before you can open up your bank accounts. And you want to make sure that if you do it, you make sure you also do your operating agreement. You're going to have to draft an operating agreement. So you have that.
Right, yeah, and then the S election can be separate. And you can make an S election whether or not you choose to be an LLC or a corporation. So the S election is available for both of those. Some attorneys prefer LLCs, taxes, S corps, and some don't seem to care between the two. I don't know if you have a preference, Andrea.
I don't have the reference now.
So. I think that's a question for you, Karush, about the firm license. Do you see that in the chat? It says you can't apply for a firm license if you're a provisional broker, correct?
That's correct. You have to be a full broker.
Yeah, and I would say in your industry, there are definitely make sure you consult with Karush or Hadi or somebody else in the office. There are definitely rules that are specific to your industry that some CPAs who are very knowledgeable or attorneys don't know if they don't work a lot in your industry. Right? There are some things that are very specific to your industry. Kat says accounting here told me I had to use an S corp in order to be paid through my LLC. Grace, do you know what that means?
I'm not sure if I understand the question there. But if you have a corporation, if you have an LLC, and if you want to, if it's a single member LLC, then all we need is a W-9 with your Social Security on the name of your LLC. We can still pay your corporation. South Carolina rules are a little different, so you don't require a separate license for your firm to get paid through your corporation. But I can reach out to Kat and find out what the problem is. I mean, we are asking if you're incorporated, you can be an S corp or you can be an LLC. We can pay both types of corporations.
All right. Well, if anybody should need anything, you can find me on the internet, or Karush or Hadi can give you my information. Happy to answer any questions you have, either by email or if you want to talk, whatever you need.
So we have Ariana with ADP on the call. So just want to introduce her and talk a little bit about, now that we're talking about S corporations and the advantages of that type of corporation for business. As Julie mentioned, we have to have a reasonable salary. So we ask our payroll partner ADP to explain the program they have available to RE/MAX executive associates. You can schedule a payroll. You can run it monthly, quarterly, however you find it fit for your business. But they have a special program that reduce the cost for you guys that you have a corporation for your business. So I'll let Ariana take it from here.
Yeah, so I'm gonna actually go ahead and share my screen. We have like a couple of slides and everything put together for you guys. So that's super fast. And thanks for the intro and all the good information. Can you guys see the PowerPoint and everything okay?
Mhm.
Okay, perfect. So yeah, just like Krish said, so some S corp fundamentals. So if you guys decide to go over that route and everything, I think Julie said kind of net plus 60K, it makes the most sense to do an S corp and everything. So once you get that set up and everything, we help out on the payroll side of things. Let's see, I don't know why it's not clicking through. Okay, wait 1 second. Tech difficulties. Okay, so this is myself. So I'm an associate district manager here with ADP. I work in the small business division. So I specialize in businesses 1 to 49 employees, but honestly, the bulk of my clients are 1 to 3, and a lot of them are that single S corp member businesses. So all my contact info over here, and then my retirement services partner, Ben Blevins, he's also on the line. Ben, I'll let you kind of give your little background and everything as well.
Great, thanks, Ariana. So yeah, my name is Ben Blevins, been with ADP for 5 years now. I was with Paychex before that, strictly in the retirement services division. So Julie hit the nail on the head earlier when a lot of people had questions on the SEP and versus simple versus 401k. So I work with that owner only up to 50 employees. It really depends on really kind of a conversation we have on what's the best fit. If you, especially any clients that are using a W-2 employee and not a 1099, you definitely need to lean more towards probably the simple and the 401k, just because that SEP can get a little bit more expensive if you have W-2 employees. And it all just depends on your situation, how much you want to get in, but it's a really simple, easy conversation. We work with a ton of real estate agents, a lot of S corps that are really trying to maximize their tax sheltering. And if you are an owner only, for the most part, you still do have time for this year to try to get something in place prior to obviously the December 31st to get something in there. SEPs you can do all the way up through your tax filing too. So, but a 401k or simple you can't do really. So a uni 401k is about your only option, or a SEP at this point in time for this tax year. So Ariana, I'll let you flip to the slides and then we can go through with that.
So we're just going to talk really quick. Who is ADP, kind of the steps in becoming a W-2 employee, a quick overview of what it looks like to run payroll through our system, and then some retirement options and everything like Ben said. Okay, so who is ADP? So we process payroll for 1 in 5 US workers. So we do payroll and everything for Remax Executive out here in Carolina. Andrew Wood's also a client, everything like that. So a lot of good, big clients and everything there. So we do over 600,000 businesses across 125 countries, and we do payroll for 80% of the Fortune 500 suite. And then in 2018, we did over 64 million W-2s processed. And then kind of the steps to become a W-2 employee. So, once you get your business formed and everything, Andrea helps you out with all of that. Basically, all you need to decide is how often you want to pay yourself and how much, and we take care of the rest. So ADP assumes full tax liability for everything run through payroll, the tax deposits on the federal and the state side, all the tax filings. So your 940, your 941, NC5, NCUOI 101. I-9, W-4 compliance, we help out with all of that, record keeper, TPA, fiduciary services, and then we help produce those W-2s at the end of the year electronically, or you get them delivered to your house. And so we'll just kind of show a quick demo of what it looks like. So this is what it would look like when you would log into our platform. Super easy to use. You would just click right here where it says run payroll. And then it would take you to this page. So it would show yourself as the employee right here. You would enter in a salary amount. It's flexible. So if 1 month you want to pay yourself more, 1 month you want to pay yourself less, you just change it right in here. And then if you had any other employees or an assistant or something you had on your payroll as well, or 1099 contractors as well, you can pay them all through our system right in here. Super easy. And then you would just click preview payroll. And then it would show you your total cash required. So it's going to break out all of the different taxes and everything that you're paying. So the gross pay would be showed right here, the taxes that you're paying as an employee coming out of that paycheck, any deductions. So if you set up a 401k or a simple IRA or health savings account, something like that, that can all be deducted through our system. And then it would spit out your net pay and then the taxes that you're paying as an employer. So it's going to show you a good overview right here. And then we have a lot of different reports that you can pull to send to your CPA. We can link them up to your payroll account and everything. So it's all streamlined through our system. And literally all you would have to do, check the total cash in your account, make sure it's a future check date, and then click approve payroll and you're good to go. So super easy. And then just some quick facts about ADP. So we're no contracts, no termination fees, and then it's a per payroll fee based process. So it's based on the number of times that you process your payroll and the number of employees that you have on your payroll. And the good news is we have a client appreciation program. So a ton of my clients don't even pay for their payroll. So we can get you guys hooked up on some free payroll and everything in the year as well. And then right now we have some special discounts going on. I believe it's $45 a month, kind of depending on how often you pay yourself and how many employees that you have, where you would have this service and you just would need to sign up by the end of Q4. And then I will pass it over to Ben to kind of touch on some retirement. I know that was a big question and everything. So he'll definitely have some good talking points and answer some questions in there.
Yeah, thanks, Ariana. So you can go ahead and flip to the next slide on there.
Perfect.
So this really depends on, like I said, if you've got employees or not. We've really seen a really big industry trend with the labor market shortage. I know some of y'all are probably owner only, but obviously finding people to help from hiring and retaining has been a huge issue for the last 18 months. And obviously retirement, besides health insurance, is the second most wanted benefit. So we've seen a lot of uptick in that regard. There's also a lot of federal and legislative mandates that are coming through the pipeline. One of them is the Secure Act that got passed in 2020. It did a really good job of helping small business owners with increasing the tax credits that you guys would qualify for based on how many employees you have or whatnot, even if those employees don't participate. Another thing that's coming through the pipeline, and it could be coming through in January, is there could be a potential federal mandate by the end of next year that if you have over 5 employees, you will have to give them access to either the state retirement plan that'll be created through North Carolina, or you will have to offer some type of 401k. Not saying that you have to do a match or anything like that, but you have to give them options of basically making the money move automatically through the payroll system or through QuickBooks or whatever the case may be. This has already happened in California, Colorado, Oregon, New York just passed, Pennsylvania. So it's coming. It's both. It's a good law. It's getting passed. It's got bipartisan support. it's just kind of been stalemated with all the infrastructure bill and everything else going on, to be honest with you. So, but we're thinking, obviously ADP is the third largest 401k provider in the country. We pay attention to a lot of the stuff that's going on. It affects how, obviously, their bottom dollar and legislation going through. But everything that we're hearing is this is coming. It just depends on if it's going to be next year or the year after. And quite frankly, from a retirement standpoint, I mean, I probably set up 270 to 300 plans in the last 7 years for big businesses, small businesses. And the one thing I continually see, and it's gotten better, is there's no telling where Social Security is going to be in another 10 or 15 years. People's savings have been reduced, and retirement through a 401k or a SEP or a simple is really kind of that third leg of the stool that people are really going to start taking advantage of, hopefully, in that regard. And obviously, with y'all being in real estate, the market is insane right now, but the stock market is insane too. I mean, we're turned almost 70% since March or April of last year when COVID hit. So it'll obviously go through its bumps and bruises, just as the real estate industry, but it always would help to be diversified. I'm not here to give you the financial advice. I do have the licensing, I can do all that, but really my goal and my role at ADP is to set up the right type of plan, the best tax shelter, and then help educate those employees, if you do have them, to enroll and everything like that. We do work with financial advisors. So if you have a financial advisor that you have through Merrill Lynch or Edward Jones or whoever, independent, I work with advisors all the time. I set the plan up, design it, and then the advisor would be the one that handles the investment choices. If you don't have a financial advisor and you want to go direct through us, we do offer fiduciary services, which is really important. And we also, on several of our platforms, we have a no asset-based product, which is really important, especially as you continue to put money in the plan. If you don't use ADP or you ever go look at this for yourself, always find out what type of asset fees you're paying. It can really substantially reduce your overall return, even if it's 0.5% or 1%. I can't tell you how many times I've taken over a plan and they've got $1 million in it. It's a 10-person company and they're paying $15,000 a year in fees that they have no idea about. And it's coming right out of the assets in the plan. So we benchmark plans, we do all that, we take a look at it in that regard. But Ariana, we can go to that next slide. And this is a great quote by Buffett: greatest skill a small business owner can develop is the ability to pay themselves first. I talk about this in every education meeting that I do with employees when I go out to companies that set up a plan. No one thinks about it, but I read it's also from a book called Automatic Millionaire. It basically talks about everybody that gets paid, they always pay their rent or their mortgage, car payments, and then whatever money's left over, they go to the movies or go out to eat or whatever. The mindset is pay your future self first. So put away 5%, 10%, 15% of your future self, because you can't spend that money if it's going out the door to your savings in that regard. So just a great onset. And I think Warren Buffett's been pretty successful in his mindset as far as investing in retirement goes. We can go. And then these are the three kind of ways, or four ways. You've got the deferred comp. Julie kind of hit on this. The next slide will show, I think, the amounts between the SEP and then 401ks, but it really just depends. Again, it's a quick 10-15 minute conversation with me, or if you have a financial advisor, to touch base with them on kind of designing and seeing what the best plan is based on how much money you're putting in, what employee count you have, are they full-time, are they part-time? There's a kind of a lot that goes into the design piece of it. And obviously the match and like your SEP contributions, I think Rachel was commenting earlier on the questions, it's a business write-off. So I know Julie had mentioned that $6,000 truck or 6,000 pound expense. Maybe you don't need to buy a truck every single year. You can throw in 30, 40, 50 grand in your SEP retirement, and that's a huge write-off compared to writing off a new vehicle every year. And then we already covered the tax credits. Those are huge. They came out in 2020, and I think, to be honest with you, I think they're going to go full credit next year or the year after once that mandate comes through. We're good on that one. We're good on that one. Already talked. We do all three: ADP, SEP, Simple IRA, 401k. A really good deal as well is obviously real estate agents. You guys work all kinds of hours and you got a ton of stuff going on. We don't have to have the payroll. You don't have to have payroll to set any of these plans up. I'd say out of the 70,000 plans we have, probably 75 to 80% do have the payroll. Everything's integrated on any of these plans, the SEP, Simpler 401k. It's all automated. The money movement happens automatically. The filing of the 5,500 happens automatically. Everything is completely taken care of if you have payroll. It's because all of these plans run off W-2 payroll data. So it makes it much easier for your CPA, your financial advisor, if you have one, and easier on yourself as far as administration wise. If you don't have payroll, we're going to be just like any other provider out there as far as Fidelity, Voya, John Hancock, whoever you got, it'll be the same way in that regard. And pros and cons of SEP, we kind of already hit on this. I'm not going to go a ton through that just because we covered a lot of this already. There are several cons. Again, this is something, if you're interested in looking at it, I'll be more than happy to talk to you individually for 10 or 15 minutes. The big things on the SEP, make sure if you have one that the doc is written where if you ever hire an assistant, we see a lot of times, even if you hire one person and they make more than $600 a year, if your document's not written the correct way, whatever you give yourself, you have to give them. So that could, even if they make 10 grand, that could then knock you out of that SEP being cost effective, because if you do 25% of 10 grand, you're paying that person $2,500. So make sure your doc is written, if you have one set up already, the correct way, just in case you ever hire anybody from a W-2. 1099s don't count, so don't worry about that as far as that goes. Simples, the same thing, no 5,500, a little less admin. Lower the cons on that, lower employee deferral limits. So again, it just really depends on the conversation that we have and what really you're trying to accomplish. And then you can go to the next one, the 401k. Higher limits, if you're doing really well and you want to put in a decent amount, 401k is probably the route to go. It is a little bit more complex as far as the design, but with the payroll, it really is not. It's simplified that way. Costs are obviously more, but it does give you a ton more options. And sometimes people want those options. Some people rather want the bare basic minimum. So it really just depends on what you want to do. And that's our contact information. So Ariana, that's it for me, unless you have anything or any questions on my side.
I think that's pretty much it. So like we have our contact info and everything in the Google Drive that we created. So we'll make sure to send that out to everyone. And then we can just reach out and have a quick conversation and get it all set up and in place.
And I will send everyone on the call the Google Drive information. I'll also let you know when the video recording is available with a link to the YouTube page, and we're also going to put it on Facebook. And then I'll also send some more documents. Does anyone have any questions to close this out? Well, all righty. Well, thank you all for being here. And I think that this went really well. Thank you, Andrea and Ariana and Ben. And I know that Julie had to get off, but this was great. We really appreciate your time. And yeah, thank you.